Good morning. Welcome to the changes for 2024 to the EARS data collection webinar provided by the Texas Comptroller of Public Accounts Property Tax Division. I'm Steve Rothstein. Brian Beck and James White will also be presenting information during this webinar. We will be doing a high-level review of the 2024 changes to the EARS data collection. If you have any questions while we are presenting, please enter them into the chat window. We will answer your questions at the end of the presentation, although we may address it sooner if multiple people have the same or very similar questions. Questions specific to your appraisal district or school district should be submitted via email to the ptad.ears, that's PTAD EARS mailbox, and we'll provide that address at the end of the webinar. We are going to start with James providing information on the changes to the EARS data file. James?
Good morning, everyone. As Steve said, my name is James White, and I will do the presenting on the EARS data file. During this presentation, we're going to cover a few subjects. I will present the 2024 changes to the EARS data file. Brian will cover the 2024 changes to the old freeze form, that's form 50-253. And Steve will be presenting the new freeze and deferral spreadsheet file, and that's form 5897. And of course, as Steve said, we'll have some helpful resources at the end of the presentation. Okay. So the first of the new EARS data fields is AJR 86, the construction status field. This is a yes/no field indicating the main improvement on the property was incomplete, that is still in the process of its initial construction on January 1st of the year. If the structure was not complete, then you should also have a value in the new construction amount field. That's the AJR 19 field. The status indicator does not include remodeling or additions to existing structures. It is only the initial construction. The next new field is AJR 87, the child care facility exemption percentage offered. This is a numeric field which indicates the percentage offered by a taxing unit if they adopt the exemption for child care facilities. It is required for all properties whether they receive the exemption or not. You would enter the value of the percentage as a number, not as a decimal. And if they do not offer it, it would of course be a 0. AJR 88 is the child care facility exemption amount. This is a numeric field which indicates the actual amount of the exemption granted for a child care facility. Then we have AJR 89. This is the medical or biomedical property exemption. Again, this is a numeric field which indicates the amount of the exemption granted for medical or biomedical property. AJR 90 is the loss to cap on non-resident, non-homestead real property increase. This is a numeric field which indicates the amount of the loss to the increase in the market value of the non-homestead real property. This should be equal to the current market value of the property minus 120% of the previous year's market value minus the new construction amounts. Seems to be missing a couple of fields here. Okay. AJR 91 is the tax deferral amount. This numeric field indicates the amount of taxes deferred by the property owner for this taxing unit during the previous year. Do not include taxes for other taxing units or taxes that were due originally for years other than the one prior to the school district property value study year for this year's file. HAR 92, the tax ceiling amount. And this is adjusted for the rate compression. This numeric field indicates the amount of the ceiling on taxes or the freeze on an elderly or disabled property owner's homestead. This is after the freeze was adjusted for the tax rate compression. Excuse me. The existing tax ceiling amount field AJR 72 is clarified as being the current freeze amount before all adjustments. AJR 93 is a new field, and this is the jetty agreement loss amount. This numeric field indicates the amount of any exemption attributed to a jetty agreement. This applies whether the agreement is in the construction phase or the incentive phase. This exemption only applies to ISD taxing units, and this field will be 0 for all other taxing units. AJR 94, current year percentage completion. This numeric field indicates the percentage of the main improvements initial construction that was complete on January 1 of the current tax year. You would enter the value of the percentage as a number, not as a decimal. So if you have an 80% completion, enter that as 80, not 0.8. AJR 95, previous year percentage complete. This numeric field indicates the percentage of the main improvements initial construction that was complete on January 1 of the previous tax year. Enter the value of the percentage as a number, not as a decimal. AJR 96, previous year land value. This numeric field indicates the market value in whole dollars reported in the previous year for the land for this property in the identified taxing unit. This value is after ARB adjustments are made. Do not use a capped value. AJR 97, previous year improvement value. This numeric field indicates the market value in whole dollars reported in the previous tax year for the improvements on this property in the identified taxing unit. This field is also after ARB adjustments are made. Again, do not use a capped value. Now, one of the major changes to the EARS data file, of course, is that the fields that used to be voluntary and were not checked by PTAD are now mandatory. For example, in previous years, if the date of construction for the improvement on an account was unknown, the field could be left blank. A blank field is no longer acceptable. If you must do so, estimate the date so that you can have a value in this required field. Now, of course, there are a few fields that are exceptions to the mandatory completion rule. These fields are specifically identified as exceptions in the EARS manual. As an example of an exception, if the appraisal district does not use fields such as the NAICS or SIC codes, then these fields may still be left blank. However, if you have the data, the field must be completed. At this point, I will turn over the presentation to Brian Beck.
Good morning, everybody. As James mentioned, I am Brian Beck here at PTAD, and I want to talk to you today about the fact that we are changing the way that we collect data for ISDs concerning their losses to both the freeze and deferred taxes. We will be using a new spreadsheet that is formally called the Data Collection for Limitation on Homesteads of Elderly and Disabled or Deferred Taxes spreadsheet, Form 50-897-A. Yes, that is a mouthful. For the remainder of the time here, we are simply going to refer to this as the freeze and deferral spreadsheet. And that's probably how we will almost always refer to it. For 2024, the use of the freeze and deferral spreadsheet is optional, but preferred for both EARs and ongoing protests and audits. Beginning with the 2025 SDPVS year, the freeze and deferral for spreadsheet will be mandatory. This means that Form 50-253, the old freeze form, and 50-851, the deferral form, will no longer be accepted starting next year. While we encourage all appraisal districts to transition to the freeze and deferral spreadsheet for the 2024 SDPVS, we will continue to accept data submitted using the old freeze and deferral forms this year. However, there are changes to the old freeze form, and I will talk about those now. Updates to Form 50-253, or the freeze form, were required to allow for the reporting and tracking of changes due to adjustments for tax rate compression and an increase in homestead exemption, in accordance with Senate Bill 2 of the second called session of the 88th Legislature and Senate Bill 12 of the second called session of the 87th Legislature. Because of these updates, it is very important that you do not use any prior version of the freeze form that contains only one column or with the limited three-field column B. Use of a prior form will cause your freeze form to be rejected for the 2024 SDPVS. For 2023, the law required us to report two different freeze loss amounts. To do that, we added a second column, column B, for the three lines that were needed for the data. In preparing for the change to the freeze and deferral spreadsheet, we found that there were some unusual cases in 2024 where a property could have a loss to the freeze using the adjusted freeze level and not have a loss to the freeze using the unadjusted freeze level, or vice versa. As a result, we found that we needed to fully calculate the loss to the freeze for each case separately. In order to do this, we had to modify the form so that Section 2 now has two full columns. Column A is for the limitation amounts that will apply for the current SDPVS year. Column B is for the amounts that would have applied for the current SDPVS year if it had not been adjusted for tax rate compression and homestead exemption. When you calculate values for this form and the existing deferral form, you must use the method that Steve is going to describe shortly to you on how to calculate the freeze losses on the new freeze and deferral spreadsheet, or you may not arrive at the correct amount. This would in turn cost the school funding from TEA. I'll now turn this over to Steve to go into more detail about the new spreadsheet.
Thank you. We'll now review the data collection for limitation on homesteads of elderly and disabled or deferred taxes spreadsheet, Form 50-897B, and you'll see that we refer to it two ways. We actually have a PDF of the instructions that is Form A, and the actual spreadsheet is Form B. Our agency requires the separate form numbers. This spreadsheet will be used for both the original data collection during the ERS process and for audits or protests. When the spreadsheet is used for the original data collection, you may send in one spreadsheet with the data for all ISDs in your appraisal district, or you may send in one for each ISD. When the spreadsheet is used for an audit or protest, it will be restricted to just the one ISD and may not contain other ISDs, even if they are being protested or audited also. During our ERS data collection, one analyst is assigned to work each appraisal district, so they would get all the information for the whole district. But during protests and audits, each protest or audit may go to a different analyst, and they wouldn't have the information if you send it in for the one protest. Also, since the limitation on taxes is applied to the whole property, you'll only send in one record for each account for each ISD that taxes that account. The record should include the total values for the property and its exemptions. It is not necessary to submit one record per category as we do in the ERS file. This is the first part of the instructions. As with other spreadsheet form types, the first tab in the spreadsheet will contain instructions and field descriptions for each column in the second tab. One of the important general instructions I would like to point out is that you should include one record for each property that has a freeze or a tax deferral, or both. You may include properties that are just frozen that year and properties that have no loss to the freeze for whatever reason, or you may exclude them. When we calculate the loss from these records, we only use accounts that actually have a loss. Also, if the property has both a freeze and deferral, just include one record for it. We match the records to our database of records from the ERS file, and if you send in two records, it would confuse our updates on that file where we store the data and could result in incorrect freeze or deferral loss values. The data collection spreadsheet has quite a few columns. The SD-PVS year is required so that we know what year to attribute the data to or the loss. The next four columns, the appraisal district ID number, the ISD ID number, the ISD name, and the county ID, help identify the specific taxing unit in our system. And by now, I think everyone knows this about the county ID. I want to repeat it just to be sure that it's not mistaken. The information for the county ID will usually match the appraisal district ID number. For example, Harris County is 101 and Harris Central Appraisal District is also 101. The sole exception to this match is the Potter Randall Appraisal District that has two counties. For Potter Randall, the county ID may not match the appraisal district ID column. We use 188 as the number for Potter Randall Appraisal District. 188 is the county number for Potter County, but 191 is the number for Randall County. Finally, the next three columns, appraisal district account number, appraisal district short account number, and the tax office account number, help identify the individual property receiving the limitation or deferral. You may have already noticed that columns A through G are the same columns already included in the ERS file on the AJR record, and that's how we match the records to our ERS data. Column H, the tax office account number, is different because we do not get the tax office account number during ERS, but this form may be submitted by the appraisal district office or the tax assessor collector's office if the appraisal district does not collect the freeze data themselves. When this form is completed by the tax collector's office, we must have a way to link the records between the ERS data file and this data collection file, so we can verify that each property included in the data collection matches a record in the EARS data file. Tax offices probably use their own account number, but they do get or should get the appraisal district account numbers to match it to. Each record in the spreadsheet will be matched to the EARS data file based upon the ISD, the appraisal district, the account number or GOID, and the short account number or parcel ID. A record in the spreadsheet may match multiple records in the EARS data file with different categories. If the spreadsheet record matches multiple EARS data file records, the spreadsheet value data should equal the sum of the data file records. Records that do not match the EARS data file for identifying the parcel will be rejected, and their value will not be reflected in your freeze or deferral amounts. This is of particular importance when the form is filled out by the tax assessor collector's office for an ISD that is split. We have had a problem in the past with some tax offices who send in the freeze data for the whole ISD in one form and not by county. When we enter the data for the whole ISD like that, it would show the entire loss in one county and no freeze loss for the other county. And that has always caused problems for us when we're trying to answer legislative questions on how many and how much loss, how many frozen properties and how much loss there are in any one particular county. Next three columns, I, J, and K, of the data collection spreadsheet are tax ceiling exists, tax total market value, and 10% cap loss. Tax ceiling exists is a yes/no field to indicate that this property is subject to a ceiling on taxes or has a tax freeze because it is an elderly or disabled person's homestead or their qualified surviving spouse. An N in this column means the record is only necessary for the deferral calculations. Total market value is a numeric field that is the total market value for the account before any loss to the 10% cap, but after any ARB adjustments. This is or should be the sum of what is reported in the EARS AJR record values for AJR 34 through 38. 10% cap loss is a numeric field that is the value for any loss to the 10% cap on increases in appraised value, and it's the same number that would be reported as the EARS AJR 67 amount. Columns L through Z contain the state mandated exemptions that might be applied to a homestead property. We did not include the exemptions that would not apply to a homestead. You might notice every one of those columns is also included in the EARS data file. However, in the limitation and deferral spreadsheet, we tried to group them conveniently by state mandated or local optional because they get subtracted and calculated in the freeze form differently. Columns AA through AJ contain the local optional exemptions that are applicable to a homestead. We did not include exemptions that are not possible to apply to a homestead, such as a Freeport exemption. One reason that we ask for these values and for the individual property IDs is to match our EARS records, is that we use the EARS values to calculate the freeze loss and deferral amounts if this spreadsheet is submitted before preliminary is certified. If the spreadsheet is submitted after preliminary for an audit or a protest, we'll use the values in the spreadsheet to calculate the freeze loss and deferral amounts. The final three columns, AK through AM, are possibly the most important and most confusing values in the spreadsheet record. Columns AK and AL are required values for any property receiving a freeze limitation. Without these values, the property cannot be included in the freeze calculations for any ISD. If they're left blank and the freeze existing field, column I, is marked yes, the record will be rejected. And by that, I recognize that a 0 is a valid freeze amount. It will be rejected if they're left totally blank, not if there's a 0 in there. We will take the 0 as the freeze amount if it's marked 0 and marked as a freeze record. Column AK, current tax ceiling, is the amount of the limitation on ceiling on taxes on an elderly or disabled property owner's homestead after the tax rate compression. It's the amount of the freeze used on this year's tax bill sent to the homeowner. And on the old freeze form, these were your column A values. Column AL, the tax ceiling amount after or before tax rate compression, is the amount of the ceiling on taxes for the homeowner before tax rate compression adjustment. On the old freeze form, this was the column B value. This is a cumulative adjusted rate before any of the adjustments that started in 2022. So I'm going to give you two examples of how this should be reported. For 2024, if the spreadsheet is sent in for 2024, if the property had a freeze created for the first time in 2022 or earlier, this would be the 2022 limitation amount, adjusted only if there's any new construction amount on the account. If the property had a freeze created for the first time in 2023, this would be the 2023 limitation amount, adjusted only for the new construction amount. And if the property had a freeze created for the first time in 2024, it would be the 2024 freeze amount, and that would be the same amount in both columns AK and AL. As I was mentioning, if it was created that year, there's no loss to the freeze. You probably don't need to include the record. Won't argue if you do. If the spreadsheet is sent in for SDPVS year 2025, if the property had a freeze created for the first time in 2022 or earlier, it is still the 2022 limitation amount, adjusted only for any new construction in the year since. If it had the freeze created for the first time in 23, it would be the 23 limitation amount, adjusted only for new construction. If the property had the freeze created for the first time in 24, it would be the 24 limitation amount, adjusted only for the new construction amount. And if the property had the freeze created for the first time in 25, it would be the 25 freeze amount, the same amount in column AK again. As you can see, that's how we're going to keep it cumulative for all the continuing tax rate compression that they put into law. Column AM, taxes deferred, is required for any property that is to be included in deferral calculations. Careful attention is required for this field. If you're submitting the spreadsheet for EARS data collection or for a protest before the current deferrals are known for that year, the value is the levy deferred for the previous year. However, if you're submitting this spreadsheet for an audit or when you have current year deferral amounts, the value in this field is the levy deferred for the tax year being audited or protested. That one gets a little tricky also. As I mentioned earlier, if the spreadsheet is submitted before the preliminary findings, we'll use the data in the EARS records for the value. To calculate the deferral loss, we will sum what is in the EARS records for the ISD. If there are no deferral amounts in the EARS file, we will use the spreadsheet data. Whether we use the EARS data or the spreadsheet data, the deferral loss is the total of the appropriate field, either in our EARS data or column AM, for that ISD. And please remember, this is the levy lost, not the taxable value, and no interest on it or penalties. When we calculate the freeze loss, we do it twice for each record. The first time through, we calculate the current freeze loss, column A on the form, on the old form. Then we go through and calculate the pre-adjustment freeze loss. If this is part of the EARS data collection, that is, if the spreadsheet is sent in before preliminary certification, we use the freeze amount from the spreadsheet but the reported market values and exemptions from the EARS record. If there's more than one EARS record where the account numbers and taxing unit match up, with one exception, we combine the records for the total values of the exemption and market. We only use matching records if the account has more than one property being used. And since you can have homesteads on open space land, we use category D1 values only if the land size is less than 20 acres. We use that rule for it because that's the only way to separate how much of the loss applies, and the maximum size for a homestead to apply to is 20 acres. Normal process on a larger property, D1 property, is we see the home site, the 1 acre or so, moved out into a separate record. The D1 record would have more than 20 acres and it would not get. But for example, if it's a small beekeeper that only requires 5 acres, we would include the 5 acres in the freeze because they'd all be part of the homestead. As I mentioned earlier, when we calculate the freeze loss, we only count the records that have an actual loss to the freeze. If there are records that have no loss to the freeze included, when we sum the amounts, the math which is calculated on the sums would not be an accurate representation of the loss. This may be a change to how you've been calculating the freeze loss, especially if you were calculating from the number of frozen properties on a recap. Since we're calculating these values for columns A and B separately, it is very likely that the number of frozen properties and the total market value may not agree between the two columns now. If there are questions about how this calculation can work, feel free to contact me, and I can send you an Excel spreadsheet we created that contains sample data entirely made up to make sure that we covered every specific situation. And it will show you the formulas we use to calculate it, and it might help you when you see how we're calculating those values. Unfortunately, the forms and spreadsheets we mentioned in the year's manual have been changed since we published them. The forms and spreadsheets we used in this webinar are the current proposed forms. They're still subject to change, either because graphics or somebody makes a change to them or we find more problems with them. The new version of the current freeze form 50-253 is being submitted for publication by the end of this week. If anyone needs a draft copy, such as to program their system to generate it, James or I will be happy to send you one. Using a draft copy of the new form will be acceptable for the year's data collection or audits this year. There are significant changes to the freeze and deferral spreadsheet from what we published, and we did post it in the EARS manual and it's changed. We won't be able to get the EARS manual updated, but as we said earlier, we can send a copy of the current draft spreadsheet to anyone who needs it. The changes from what we published came about when we started trying to get the computers programmed to accept the spreadsheet and process it. Our IT team worked with us and found we now think we have it where it will work. I also sent it out to some people in the field and they saw some problems, so we made some changes to it based on what they saw and we fixed those. Now we have it. I think we have it in a workable format. I don't foresee any more changes, but if any of you request a copy and we want to send it and we send you one, if you see a problem, let us know so that we can fix it. We really want to get these working properly. And if you see anything, please feel free to send me any questions about these. Finally, when completing the year's data file or other PTAD forms, you may need some helpful resources. We have up here the links to our document section and our form section. Brian just put those out in the chat for you to have a copy of without having to try and handwrite them. The PTAD ears mailbox is shown. And if you want to email me to request a copy of the spreadsheets or the forms or the calculations I used, I put my email on the form also. Now we have had a couple questions come in, and I want to clarify those. The first question was asked is if the child care exemption is a local optional exemption, and yes, it is strictly local optional and will count that way. The second one was, does AJR 91 include the interest that is being applied or just the base tax? And we're looking at just the tax levy lost for that year, just the base tax, not any interest or penalties. Another question that came in, are the values only for the home site, or should they be the total value of the account, including productivity and non-home site value? And I think I covered that, but if it's under 20 acres of productivity value, include it. And if it's over 20 acres, the freeze values or the exemption values mentioned do not apply to the D1 property. It would be just the home site values. If the year's submission or certification includes data in the fields, do you still submit the spreadsheet? We found a problem that we did ask for them in the spreadsheet in the ears file, and one or two people have pointed out to me that you can't get the maximum compressed rate and the adjustments for it till after the ears files are due normally, because TEA won't put it out. So we're going to use the values in the spreadsheet, and I think I would strongly recommend submitting it. If you want to just go with the values in the freeze, we can, in the ears file, we can do that, but I am not sure that it would be to the best interest of the school. And finally, when will all these new forms be available online? That I can't tell you. I think they'll be available within a short period, say by the end of June. But we ran into some problems with the ears manual where it took 2 months to get it through the graphics, and they had to run it through ADA compatibility, and we didn't get it out anywhere near when we thought we would. Our division will send the forms down to be posted to the IT team within a week, unless someone tells me of a change it has to be made, but as quickly as we can. So I'm sincerely believing that they'll be on the web by the end of June, but I don't want to guarantee it. And I think I just answered the question about if the submission has to include the MCR adjusted, will the deadlines be approved? Not for that, because that's why we're going with the spreadsheet. We are going to post the slides and the comments or this video on the website. It will actually be re-recorded to clarify these questions before it goes up. So it will be available for you to review, and that shouldn't take more than about a week. When can we submit EARS test files? You can submit them now. We have received a couple and are starting to process them and get them back out. And I'm not sure I understand the question. If the EARS are for the 24 tax ceiling and the spreadsheets for 23. No, the ceiling applied in the spreadsheet would be for the year that you're submitting the auditor for. So, for example, if you submitted an audit of the 2021 before any adjustments were done, you would leave all of the adjusted fields blank, and our program will know when we say it's got 2022 in the left-hand column. which formulas to use. And yes, the Excel spreadsheet can be used for protests also. CAT has no tax deferral information, but have historically handled and submitted the freeze data. Um, I'm going to say B, that one is a situation that hadn't occurred to me. I will have to get back with you on that since you have half the data and not all. We might have to have you submit or have the tax office submit the deferral as just the deferral information. Yeah, I figured they wouldn't use the same system. That never makes it easy on us. That one, I hadn't considered that situation. We'll start working on them. Yes, email me to get a sample of the spreadsheet, please. Leslie, thank you. I didn't think of that situation occur. I knew that some CADs did nothing with the assessment or the collection data, and others did. And I didn't think that someone would have the freeze and not the deferral information. We're going to have to discuss that one after this and get back to everybody. We will email that out, whatever the decision on that is. If there are no other questions, we're pretty much done. If you think of a question, you can always email it to the PTAD ears mailbox, or Brian just put up my email address for everybody to send the request to the for the sample forms and spreadsheet. I appreciate you all showing up for this and listening. I'm hoping that it helps make the year's process a little easier for us this year and every year. We're going to continue doing this with the changes every year from now on, and we will have a uh, area with videos explaining the whole year's process on our website soon. Thank you.